to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, welcome back, everyone, to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the half hour, however we feel like going today, AJ Brown. Good morning, AJ.
Hey, Sip.
Today, June 3rd. We're here in these summer months. Half the year is here. And a lot of the same topics I feel like are still on the radar. But to start the day, the big news was the unemployment number. What are your thoughts off that right off the bat?
I mean, it looks good. They revised the previous numbers to be higher than expected. The numbers that came in today were higher than expected. An interesting number is this one down here, the average hourly earnings, this 5.2%. So that's starting to moderate, and that's called wage inflation. And so in addition to the inflation that we see at the grocery store and at the gas pump, the Fed's also worried about rage. How about wage inflation? Maybe rage inflation as well. That might have been a little slip there that is more than, perfect for the situation. So, yeah, they want to see that number go down as well. They've been talking about the overheating hiring. So, yeah, I think it looks good. It looks like the market is taking a breather on that news.
Yeah. And in addition, I think I just saw that Tesla's going to be putting some pauses on their hiring. So I guess this is starting to trend towards things are slowing down. And I heard on some of the chatter that maybe, future rate increases might come down to 25 basis points. Could you see that happening?
Well, here's the other thing that we need to look at. Speaking of future rate hikes or drops, always, and we talk about that here a lot, always on the camera is the Fed interest rate, right? The borrowing rate that banks use to lend money to each other. But I keep drawing the attention or the spotlight to this Fed balance sheet that they've been using. And I just want you to notice in the last week that was reported how much selling of assets. Now, when you think about it, the Fed is the only person or the only entity that when they buy things, the money they use to buy things with is magic money, right? So when they go out and they buy securities, and they're a big customer of buying treasury bonds, mortgage-backed securities, and more recently, really A-class corporate bonds. And now they're selling it back. And so again, just like buying, the money is made magically, right? In other words, they just create the money and buy stuff with it. When they sell that stuff back, the money disintegrates. So when you see this selling, which, from just a couple of weeks ago, mid-April, we were up at a balance sheet of almost $9 trillion. And now we're down to $8.9 trillion. That's almost $100 billion has just been taken out of the circulation. It totally is disintegrated. And so when you think about that and how the Fed is hoping to do about $100 trillion of disintegrating money every month, I mean, they're planning on doing that through 2025. It's called sopping up the liquidity. And that means money's going to start to get tighter and tighter, which is what they want to see. So with this going on, yeah, I don't doubt that they might play with the more visible numbers, like say, give people relief by saying, we don't have to raise rates by 0.5%, because this is actually more controlling behind the scenes.
Yeah, and I think the general public never is really aware of this. They're just hearing that top line number, and when you zoom out like that, yeah, I think that's definitely going to start to trend in the opposite direction, as you said, through the rest of the year into 12 months or so, or 12 months plus.
Yeah.
And so I guess I'm curious to know how this is affecting the overall market, and we tend to get the S&P week to week, and I feel like we're kind of in this stagnating, starting to build some consolidation. And in previous episodes, we've kind of highlighted some episodes, but we're really starting to just get cluttered in this little in that little area there.
Well, this, if I come back to the study that I use to not identify, but to confirm my tops and my bottoms, these 3 and 5 day exponential moving average crossings, we got ourselves a bottom. We talked about that last week, and we're looking to see a top somewhere below $4,350. That's going to be a significant number to be watching. And so far, we're on target. We're moving up today. We're taking a little bit of a pause, but we're moving up to that 4,350. Even if it falls short of that and reverses down, what that's going to tell me is that we've got some more downtrend to happen. This is a range contraction move. So whenever we are moving in the direction of the trend, and right now the trend is down, that's called range expansion. Whenever we move against it, it's called range contraction. And we expect range contraction moves to go about halfway the previous move. And so that would be somewhere under 4,350. And if that happens, it's just going to reinforce for me that, hey, we're selling off. We're continuing to sell off. There still needs to be some tightening in the markets, and the Fed is going to be aggressive at that.
Yeah. And the beautiful thing about what we do here at Trading Trainer is, even if the market goes up or may potentially make that move to the downside, we have strategies and techniques to take advantage of that. And so what we're going to go into next is a few examples. I know that you have a trade that you kind of have in play now that you want to go over. And then we've got a few questions from some of the members in the audience. So if anyone watching, listening, has a question, feel free to drop it in the chat, and we'll be sure to try and get it onto the show. Otherwise, if you're interested in learning more about AJ Trading Trainer, I'm going to go ahead and drop the link to his daily webinar in the chat. We'll play a little commercial here, and then we'll go through some of those examples.
Sounds good. I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. And so the first stock that we're going to go over is Delta Airlines, ticker symbol DAL. One that we've covered in the past, and one that it sounds like you continue to get in and out of.
Yeah, absolutely. I want to review a trade I did on Delta Airlines. Now, first of all, one of the reasons why I like Delta Airlines is because it doesn't, it just exists. It's one of those companies that's boring. And I use, and a lot of our viewers know this, I use technical indicators often to help me determine my timing of entering and exiting positions. And one thing folks need to know is that when you use technical indicators, you have to make sure that the company that you're trading on, or the exchange traded fund, the sector, whatever it is that you're trading on, it can't be in the mainstream media, right? Because if it's on like ABC, NBC, CBS, BBC, if it's on those mainstream media and it's getting people like the everyday Joe interested in that symbol, your technicals, which are mathematical formulas that are looking for patterns to repeat themselves, you might as well throw them out the window And that's because as soon as you get like the Main Street everyday Joe investing or buying and selling in a symbol, it creates what we call a transient, that means temporary, external, that means it's not the usual players, stochastic, which means off the rails, shock. Shock is shocking. So, when you get the average Joe involved and excited about either buying or selling, it creates a transient external stochastic shock and it blows your technicals out the window. So, you want to make sure and double check that this is not a company like right now, Tesla. You don't want to be using technicals to be trading Tesla, right? Elon Musk is out there saying that if you don't show up at the workplace, I'm going to fire you, right? So he's in the news, not to mention he's in the news for Twitter. He's in the news for Neuralink. He's in the news. He likes to be in the news. And that means that most of his companies are off limits for technical traders. If you can find other ways to generate timing signals, great. But technical indicators are not your friend when something is in the news. So I like Delta Airlines because it's rarely in the news. Maybe a customer gets upset about wearing a mask, which is no longer even an issue, really. So, for the most part, Delta Airline just exists. And those are the symbols I like to trade. And so we have featured Delta Airlines in the past. I just wanted to feature a trade I did just over the last couple of months. And so I wanted to show you guys, here's my little trade worksheet that keeps track of this. So on April 13th, we decided after a signal. So let me show you that signal. So on April 13th, we got this little signal here. I'm using what's called the fee. So the MACD was generated by the Appel guys, right? Their last name is Appel. And since then, they've been playing with other combinations of the EMA crossings and the signal line. And so this is called the fast MACD. It's the 619.3. And that's versus the standard MACD, which is the 1226.9. So the 619.3 gave me a signal. You can see the signals are just these up and down green and red arrows. Gave me a signal on the evening of April 12th. And right after earnings on April 13th, I got my follow through. And so I got into the position. And what I did was instead of buying Delta stock, I bought some Delta calls that were deep in the money and far out in time. The Delta $20 call that doesn't expire until January 2023. And I spent $21.10 per share. I bought 5 contracts, which is the same as 500 shares. And so it was about a $10,000 investment. And then I waited, right? People are always like, wow, that's complicated. Not really. I'm doing like one transaction every couple of weeks. So I waited for my next signal. And my next signal, that's this red arrow. In fact, let me zoom into 3 months here because we can really get some. Well, I got my next signal here on May 25th. And so on April 25th. On April 26th, I went ahead and got my follow through. And that's when I did my next transactions. I sold a call and I bought a protective put. I sold the call for $2.25 a share. And then I bought the protective put, and this is what freaks a lot of people out, Sip. I bought the protective put, and I almost spent as much as I made on the call. And people are like, why would you do that? And you'll see in a second. I've now basically got a free protective put because the call, the money I made on the call, offset completely the price of the protective put. So all well and good. That was April 26th. May 20th, my call expired worthless, which means that $2.25 credit I made, I wound up on May 20th. That's it. I got to keep it. There was no more questions about it. I got to keep that money. And then a day later, so May 20th was a Friday, a trading day later on Monday, I went ahead and sold back that protective. So that protective put I bought protected me from April 26th to May 23rd. It protected me against any loss. But then when I didn't need it anymore, I sold it back and I made more money on it than I paid for it. So that's why we go ahead and buy the more expensive protective put up front, because we know that not only will it do its job and protect our butts just in case something happens, but we could also sell it back for more money than we made. So that's exactly the whole idea. When all was said and done, we started out with a cost basis of about $21.11. That's after you factor in my commissions. $21.11, and we dropped it all the way down to $18.44 just in one cycle. Now, I still own this back month option. And so I'm looking for the next to go ahead and sell that put, and I'm just waiting for another top. I did get a signal, but I never really got the follow through I was looking for on that signal, or the price I was looking for, and that signal reversed itself. So I'm just being patient, and the next time I get a nice higher move, probably up here around $44, I'll do the same thing over and over, and I'm just basically creating this monthly income. The other neat thing to point out is I'm getting close to where this trade is risk-free, meaning that I'm protecting it every time I buy a protective put. I'm protecting it for more money than I have into the trade. It's not quite there yet, but after this second cycle of doing this exact combination of trades over about a month-long period, it's going to be risk-free, which means none of my money's on the table. In fact, even if everything goes against me, I'm guaranteed a minimum reward. So this is a really cool trade, and Delta Airlines falls right into that category. One other thing, Sip, to say about Delta Airlines is around liquidity. People are always asking me, how do you know if there's enough options for me to trade? And so it's called liquidity. I look at a couple things. Mostly I look at open interest, right? Because options are not generated by the stock company or the company that issues stocks. Options are created by you and me, the people who trade options. And so we want to make sure there's enough options that if we're going to be buying and selling them, there's going to be somebody on the other side who wants to sell and buy them for us. And so I look at open interest, which tells me how many of contracts are available to be traded back and forth. And I look at the bid-ask spread, because the bid-ask spread is created by our market maker friends. And if they think that there's liquidity, it'll be smaller. There'll be a smaller difference between the bid and the ask. And if they don't think that there's liquidity, there'll be a bigger number. And so I look for 15 cents or whatever. And I look in three places, and that's why Delta Airlines shines. I look at the option that I'll be selling. And if I see numbers that are in the thousands, I have no question that there's enough people to be buying and selling with. I look about 3 to 6 months out, because in 3 to 6 months out, that's the option I'll be using for my protective option. I want to make sure that there's liquidity there. And I look at the option, if I'm going to do like I did on Delta, I'm going to substitute an option for a stock. I make sure that there's liquidity there. And so that's kind of the easy, just on the back of the napkin. We could talk more about it, but that's where you look for liquidity, is your substitute option, your protective option, and the option that you're going to be selling every month.
Yeah, and we have a really good video from one of our previous episodes where you compare it to the flea market, which I think is a really good analogy for understanding the liquidity of options. It's the options exchange is the flea market, and there's people that come to sell and there's people that come to buy, and depending on how many, that'll kind of give you the liquidity. So I always liked that analogy. It made a lot of sense to me. And the airlines and Delta Airlines,
they just keep doing business.
Tend to do well for the premium selling strategies, because it's kind of this legacy industry. I mean, they're innovating every now and then, but
and it's not going away. People travel, right? So
exactly.
I don't see it going away. And so it doesn't really get better, and it doesn't really get worse. It's just something that we could be making solid income on using our premium selling strategy.
Yeah, another airline we've looked at in the past is Jetblue.
Jetblue,
which probably doesn't fit well for the strategy because they have been in the news with their buyout of Frontier. I know that was like a thing for a while.
Yeah, it seems to have fizzled out. I've been following that because I do like to trade premium on JetBlue, and you're absolutely right. I have taken a break on doing premium against JetBlue just because it has been in the news. And it takes a certain number of days for it not to be in the news for our technicals to recalibrate to give us signals. And again, I like to use the technicals for signals. But yeah, it looks like that deal fizzled out.
Yeah.
It looks like instead of JetBlue making its deal, I think Spirit rejected it and is like, we want to go with Frontier.
Yeah, it might even get hostile. But also oil prices and gasoline are really playing into the travel industry. So that there's a lot going on there. But the Delta example is something that's continued to stay on the radar, and opportunities continue to present themselves. All right.
Absolutely.
Once again, anybody watching, listening that has a specific question on a stock, feel free to drop it into the chat and we'll try and get to it if we can. We have a few from customers, members this week. And our first one is Ally Financial from Eric in Hartford. And I think I'm saying it right. Ally. Ticker symbol ALLY.
Yeah. This is one that came up. Actually, I think Eric's part of our program, SIP, because it came up last night. So every Thursday, folks, if you're part of our premium selling program, we actually have a live interactive workshop where we pick a symbol and we actually plan it out so that we can sell premium on it. And we wind up publishing that plan in our members only web portal so everybody can take it and, tweak it for the size of their portfolio, tweak it for their risk appetite, find out exactly how many shares and what the timing is. And so Ally came up and it just ever so slightly missed the vote. We actually found 3 or 4 tickers that could have been the ones that we planned out, and we put it to a vote, and the program participants voted for a different ticker. But Ally actually came up, and I think Eric had kind of FOMO about it, and so Eric's asking about it today, which is cool. And so I like Ally. In fact, Ally is trading. One of the things I like to do is I like to measure the distance between where I perceive support and resistance to be. And so I can just do that with some drawing tools here. So it looks like we've got maybe some support at around $39 and maybe resistance somewhere around here at $44, something like that. And so if I take that number, I'm going to use my little tool here and make it exactly 39 and 44. The difference between those numbers is $5. And so I take that $5 and I'm going to divide it by the halfway mark, which is 41.50. And that's shown at this 50% number, 41.50. So if I grab my calculator and I look at that ratio is going to tell me a lot about the pattern as to whether I want to sell premium or not. So $5 divided by $41.50. That's a 12% ratio. That's what came up, 12%. Anything under 10% gives me the heebie-jeebies, meaning I'm questioning whether I want to sell premium on it. If it's under 5%, I'm not touching it with a 10-foot pole. And if it starts to get too big, like more than 35%, I'm going to be a little bit skeptical. But this is right in the sweet spot of about 10 to around 30, 35%. This is at 12%. And so this makes it a really desirable symbol to be trading premium. And this is just one of the tests. We actually give our program participants 10 different tests that they can apply to help them build confidence as to whether this is a good symbol to sell premium on. But Ally is one of those symbols. It gave us a bottom signal not too long ago, May 23rd. And so we're actually waiting for a top symbol. And so, Eric, I think you're going to wait for your top symbol. This is a perfect time for you to be actually getting your plan in place as to, what are the thresholds you're looking for? What are the timing you're looking for? Get that plan in place. And then when you get your top signal, what you're going to be looking to do is either shorting some Ally stock or buying a back month put option. Either one of those trades, a shorted stock trade or buying a back month deep in the money put option, will act as a covering position to sell premium against. So the first thing we have to do is always set up that covering position. So I think that's where we are in this. I really like this pattern. One thing we should do, since I mentioned it on Delta Airlines, is we should take a quick look at liquidity. So for instance, the May 20th, let's look at, let me come over here. I want to look at the actual live June 17th. Yeah. So you see, we've got on the call side, thousands of contracts. On the put side, again, thousands of contracts right at the money. If I go 3 to 6 months out, you still have enough contracts. We're in the hundreds, 500, here's 40, 123. That's on the call side. On the put side, we have a little bit more liquidity. And then if we're going to use a substitute option, yeah, there's enough liquidity here to say that Ally is a great candidate to be thinking about. So I like where you're thinking. I think we have to wait for our timing, and this is a perfect period for you to just get your plan in place. Make sure it's, bulletproof before we go forward.
All right. Appreciate the question, Eric from Hartford. Never been that way, but it sounds like a lovely place. Moving on to, I'm not even sure how to pronounce this one here. We're going exotic. Biomarin Pharmaceutical, ticker BMRN.
Yeah.
And that is Lisa from Boston.
Boston, Massachusetts. Yeah, okay. I don't know this company either. It looks like a biotech. I think there's a lot of biotech in Boston. The right off the top of my head, the pattern looks nice. It looks a little bit expensive. So the first thing that I would be doing is I would be, again, jumping over and seeing if I can find a potential substitute option so I don't have to pay all that money per share. Because remember, options are sold in lots of 100. So if I'm going to be doing any trading on this and I'm going to use the stock as my covering position, as my initial position, I'm going to have to buy lots of 100 shares, which means, if this is trading at about $77, like we see it trading right now, you're going to need $7,700 per contract. And so that could be a hefty chunk of change. Once we analyze risk and how much of your portfolio this should be, you might be needing a portfolio that's over $50,000 or more to be able to trade this. So that might take some of our viewers out of the equation. So let's see if we can find something cheaper. And remember, cheaper increases our risk. So you still want to do your risk calculation. But yeah, okay, I'm seeing enough open interest on the call side and the put side in an option that expires on January 20th, 2023. And I'm looking quickly at the bid-ask spread. They don't look terribly inconsistent for a back month option. So we can drop the price from $77 to probably something like maybe 27 to 30, 29, maybe $30. So drop it to, less than half the price. So that might be an idea. Let's take a longer look here. We'll go out 2 years. Okay. I see why you find this interesting for premium selling. Something happened around the earnings over here back on August 4th of what is that, 2020? Yeah, 2020. So about 2 years ago, that dropped the price of this almost in half, and then it's been stalling ever since. In other words, like many biotechs, it's fallen out of favor, right? Biotechs tend to be a company that focuses on a single either drug or application, and they usually put a lot of their value and their worth into this single drug or application. And if something happens during their quarterly earnings call where they show that maybe they faltered or they made a mistake or something, the company falls out of favor for investors that are interested in asset appreciation. But for investors who are interested in a boring stock that no longer is in the limelight to sell premium, this is where we shine, right? We turn patterns that other people would throw away into money makers. And so I see why you're interested in this. Again, I don't know much about this company, and so I'd probably be paper trading it to make sure I understand the patterns. But the signals look solid. I'm using the fast MACD again. And so it looks like we're waiting to see if we've got a bottom found. I would paper trade this. I would paper trade it. And I find when I'm paper trading, it's fine just to use the stock and not the back month option, just because I want to see how it performs. And since paper trading, I can have as much money in my portfolio as I want, because I'm like the Fed. I just create it. Of course, it doesn't turn into real money like the Fed does, but I'd paper trade this. I'd paper trade this unless you know the company already, if you've been trading it. But I'd paper trade this, and I'd look for an opportunity to buy some of the stock in my paper account, in my sim account, and go a month or two and see how this plays out. And if it does, I'd be interested in knowing the results.
Yeah, and there's nothing wrong with paper trading, right? I mean, that's how you refine your strategy. That's how you build confidence, and it's how you take some losses and learn to deal with them. Staying on the topic of pharmaceuticals, we just had a question come in on BMY, which I believe is Bristol Myers Squibb.
Oh yeah.
And this is Ray asking about your take on this.
All right, let's go out a little bit. So this is a favorite of, if you ever watch Kramer, he loves talking about Bristol Myers Squibb. The difference between this and like a biotech is that these guys are in the everyday pharmaceutical world. They're not just they're less of a company that you would expect like a venture capitalist to throw a lot of money at because they think something special is going to, and this is more of an everyday runner. So, okay, let's do that. I see that Bristol Myers Squibb over the last couple of years. Let's see if we can take a look at a 2-year chart. So they had a dip, and then they had this appreciation moment.
Is that the COVID run? Is that the COVID run there?
Yeah, you might be able to time this with like perhaps a vaccine or some sort of therapeutic that Bristol Myers Squibb probably has some investment in. I haven't traded Bristol Myers Squibb in a while, so I haven't looked at the news headlines. This is one where I would pull up the ticker on a site like FinViz, and I'd check out what they say, what the news headlines have been saying, to kind of make sense of like what happened around this time period in August of 2021 to make it start to sell off. And then what happened in the beginning of December of 2021 that started this rally. And then what happened in the beginning of April of 2022 that made it stall. But now that it is stalling, that, you might say, okay, is this something interesting for premium trading? Well, let's apply some of the already applied today. Let's figure out that ratio that I talked about a little bit earlier. So if we identify resistance and support's probably around $74.50. Resistance might be somewhere around $78. I'm going to go ahead and manually type in those numbers to get it right where I want it to be. $74.50, $78. I like those round numbers, by the way. And so the difference, again, if I pull up my calculator, the width of that channel, or the difference between support and resistance, is about what? $3.50, 78 minus 74.50. Yeah, $3.50. And we divide that by the halfway mark, 76.25, and we get a ratio. And this ratio is 4.5%. And I don't know if you caught what I said before, but if it's under 5%, what that tells me is I don't want to touch it with a 10-foot pole as far as premium selling goes. In other words, the channel is too consolidated. In fact, what I would be looking for here, if any of you out there are breakout traders, I'd be looking at catch breakout, and you can either catch a breakout actively by waiting for some thresholds and other indicators to kick in, and you have to be fast. But you get a symbol and you trade it directionally, and you can leverage an option for trading it directionally. Or if you're a little bit more elegant with your options trading, if you can time putting on a straddle or strangle type strategy. But for me, this pattern is all about getting ready to watch it break out and looking for in the news headlines what might trigger that breakout. It looks like investors are a little bit stalled, confused, uncertain. Should they buy? Should they sell? And it's like, and especially the longer that it goes sideways, the more like confusion. It's almost like a pressure cookie building up pressure, and some tinder is going to get put into that little pressure box, and it's going to either explode up or down. Oh, I hit the microphone. It's either going to explode up or down. And so I'm not interested in selling premium on this. Instead, I'd be interested in somehow catching that breakout.
Yeah, and the beautiful part, once again, about options is you can take advantage of that downside activity. And so, Ray, we appreciate the question.
That's a good one.
Let's keep it rolling. We're gonna get back to energies. Energies are a hot topic. I believe gasoline is hitting all-time highs. We're hearing about it all around the country, and so we have Tyson from Dallas wanting to know about National Oil Well Varco.
Yeah.
That's a new one for me. That's a new one for me.
No, I've watched this company. I think this company has been on our trading trainer watch list for our full-time traders. Ticker NOV. Let's take a look at this a little bit further. Hey, they just started as of November, beginning of December, giving back dividends again, which they should, because oil companies have been making a fortune in the past on this appreciation in the price of oil. So yeah, it looks like NOV kind of gives us that pattern. It's not the most consistent pattern, which means if you're a beginner at selling premium, this is going to be a little bit more difficult trade. You're going to have to do some adjusting throughout the months. But it looks like it's now in this new pattern. Let's zoom more back into the more present action. And let's, again, I'm going to keep coming back to that quick and dirty test. Let's say that we've got a level of support around, actually, it looks more like around $18. And resistance looks like it's more around $21. Let me do the same thing that I've been doing. I'm going to click on my drawing here and really just fit that pattern the way I see it, $18 to $21. That means if I zoom in here a little bit, my halfway point is $19.50 and my width is $3. So again, whipping out the calculator. $3 is width. I'm going to divide that by $19.50. I get that ratio. This ratio is 15.4%. Falls right in my sweet spot. I kind of like that. And it looks like we're coming up to this resistance level around $1. If we top up, that's a perfect opportunity to either short some stock and or buy some back month deep in the money put options, which basically act like a shorted stock. The only benefit is, besides the leverage, the other benefit is you can use a cash trade. You can use, for instance, a retirement account that's only traded in cash. You don't need to have a margin account since there's no shorting of a position. And we'd be ready to go. When in doubt, like Sip said, paper trade, right? See how this plays out for a month or two. And something we had Norman on last week, or was it 2 weeks ago?
Yeah, it was like 2-3 weeks ago, I think.
So Norman came on to our show, and one thing he said that resonated with me is that trading should be treated like a business, like you're investing in a business. And I was thinking about that, and I'm like, well, if I had a chunk of money, I could invest in some real estate. I could invest in buying a franchise like a Taco Bell stand, or I could invest in the markets. When I buy real estate, or if I buy a franchise, there's no paper trading, right? You have to like sink the money in and then fricking hope, sink or swim, right? Jump into the deep end. So, the beautiful part about investing in the markets is there are all these sim accounts and you can test your strategies out before you actually sink your real money in. And I don't know any other business opportunity where you can actually do that, where you don't have to invest the money. You can actually, paper trade and try things out safely, risk free, without actually, and still getting the full feeling. It's like flight simulators. Nowadays pilots have to log so many hours in the flight simulators before they actually fly. Same thing here. You have a simulator. You have the ability to try out all your stuff. Why wouldn't you? Why would you do anything else? That's what I've asked myself for forever.
Yeah, and as traders, there's so many options, and as options traders, there's so many options to options.
There's
And
options to options.
yeah, and so the best thing to do is to get that strategy down, paper trade. If you're interested in learning more, jump over into AJ's daily workshop, because he really does a good job of breaking it all down, and ask those questions. Come join the community. Come join the Thursday mastermind call, where these ideas, these tickers are being thrown around and people are succeeding. And that's
They really are.
what we're trying to achieve here at Trading Trainers, is helping everyone get into investing and make some money off of it. All right, so great show, great questions. Appreciate everybody providing their insights. Heading into the weekend, AJ, anything we should be keeping an eye on going? I mean, we did a good summer doldrum explanation a couple of weeks ago. Is that what we should continue to expect? A little slowdown here in the beginning of June?
Yeah, I think that keep your eye out for it, because this is great opportunities for the premium selling strategy. So even though all the other traders are taking a break because they don't have opportunities for directional moves, I think we should be watching that. We should also be watching the broad market. We want to see what happens here. I mean, I've been watching, I've been talking a lot about the bond market. The bond market seemed to, we're off of our highs in April of the 10-year treasury bond. So that means that Wall Street is thinking that things are actually moderating. The numbers in the economic reports show that things are slowly coming down, but Wall Street always has a forward view of things. And Wall Street believes, based on the bond prices, that maybe things are moderating. So we're going to keep watching this and see how well these moves are. And I'm going to continue, especially as each week comes out. I'm so curious about how much the Fed destroys money every week and every month, because that is going to people might not understand the macro picture, but that is going to move the needle away from stocks and into the bonds market. And anything that was riskier than stocks, I'm already starting to see it. I'm seeing houses on the market for longer than like overnight period. I'm seeing crypto destroyed. I'm seeing SPACs all of a sudden not even being popular. People can now put their money into other things. So let's watch that, and let's see, guys, and gals and people, focus in on these asset buys just as much as you focus in on that interest rate number.
And we'll keep an eye on that. Appreciate the insight, AJ. Anybody watching, listening for the first time, feel free to hit that subscribe, that follow, smash that like button. We appreciate it. And drop your questions in the chat. Feel free to reach out to the team with any questions. I know they get back in a very timely fashion. Appreciate the insight. Appreciate everybody tuning in. And we'll check in next week. Have a good weekend, everyone.
Yep. Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.